So, hi guys, once again, good afternoon, all of you. Shall we start? I asked you to read, I asked you to do problems of AS7. Are you done with that? Nitina Jacob. Nitina, do you have mic? Can you say hi?
Yes, sir. Yes.
What is the title of AS7, madam?
Construction contracts.
Very good. So, it deals with what? Books of
Constructions of building, books of contractors.
only contractors. So, if I am building a house, it is not applicable to me.
No, sir. If it's of your own building, it's not applicable.
Excellent. So, if it is my own building, I have to apply AS10, right? Correct. If it is my own building, I have to apply AS10.
Yes.
But if I am constructing a building as a contractor for you, for someone else, then AS7 is applicable to me. So AS7 is basically about revenue recognition. If I am a contractor, if the contract transcends between different financial years, like I have started constructing a bridge and it will take 5 years. I have started metro. It will take 7 years of time. So many accounting years are involved. How revenue is to be recognized? If the total contract price is, say, for example, 100 crores, you cannot recognize 100 crores on completion of project. No, that is against accounting. That is against accrual system. So if you are doing a contract runs into 4 accounting years and the contract price is 100 crores, you cannot say at the end of contract, I'll recognize 100 crores revenue. No. So during all these periods, year 1, year 2, year 3, year 4. So during the period, you need to recognize revenue on accrual basis. How that is to be done? Simple. The standard said a simple point. Step 1, calculate percentage completion. So AS7 construction contract is for recognizing revenue from construction contracts. Apply which one? Apply accrual and matching concept. Accrual concept and matching concept. Okay, so step 1. Calculate percentage completion. So guys, can you tell me, to calculate percentage completion, what is the method prescribed? Hello, any idea what is the method prescribed? There are 3 methods prescribed. One is cost incurred till date to total estimated cost. So you will calculate a percentage like this. How will you do that? Cost incurred till date divided by total estimated cost to complete the contract into 100. Numerator is till today whatever I have spent. Denominator is total construction cost. So denominator includes numerator plus estimated further cost. So 600 incurred till date. Okay, further cost is 200. Total cost is 800. Can you calculate and tell me the ratio? Guys, take this data. Can you calculate and tell me the ratio? $600 divided by 600 plus 200 into 100. 75%. Correct. Correct. This is A. B. Technical survey. Technical survey. So you'll call one technician, like, a person who is having a knowledge, expert, having a knowledge in construction contracts, like an engineer, architect, like in costing, you do work certified, work uncertified. So that work certified is given by an expert. Not like that, you call one expert and you ask him, Anna, please check and tell what is the percentage completed. So he did, lot of calculations, and then finally he said that 68% complete. So you will take 68%. So that is method B. Method C, physical units method. Like, you have to construct 100 kilometers of road. You have to construct, pave national highway, 100 kilometers. In that, say, for example, 82 kilometers completed. So 82% contract done. You have to construct 100 houses. In that, 60 houses construction is complete. You can say 60% contract is complete, like that. You understand? So practically, accounting standard 7 says there are 3 methods. In reality, everybody uses B. In reality, everybody uses B. But in problems, we have to do A, because if we follow B, student life is very simple and happy. ICI doesn't want that. No, will not follow B, will follow A. So always you'll have to calculate percentage completion using the data given in the question. And what is the general rule? Conservatism says, if it is resulting in loss, recognize total loss now itself. Pawan sir, but another 3 years of contract is there, Pawan sir. We are in the second year of contract only, total 5 years. Close your eyes, book total loss. That is what conservatism is. Profit you cannot book like that. But if it is going to be a loss, close your eyes, book it. And all ICI problems will result in loss only. All loss-making idiots only will come to ICI books. There are so many profit-making contractors, they will never come to ICI books. So only loss problems will be there in your books. Okay, so let us go back to percentage completion. Examples are Bekar, small examples, LKG examples. Stage of completion. Example 3. This is a good example. So, Nitina, can you read example 3, please?
Yes, sir. So profit and loss account extract in books of a contractor in respect of the following data. Contract price fixed 600, cost incurred to date 390, estimated cost to complete 260.
Very good. So please mute your call now. There is so much of noise. Okay. Show P&L account extract in the books of contractor. So there is a contractor. So he is doing a contract and the data is given. Data is given. Guys, what is the contract price? 600. Correct. What is cost incurred till date? 390. What is the cost to complete the contract? 260. So can I say 390 plus 260 is the estimated total cost of contract? Hello guys, please respond. Can I say 390 plus 260 put together is the total estimated cost? How much it is? Add this two and tell me. Add 390 260 and tell me. 650. Correct. But what is the contract price? Contract price is the selling price. Selling price is 600. Cost price is 650. So do you think we are losing money in this contract? Or this is a profit-making contract? Do you think this is a loss-making contract or profit-making contract? Loss-making contract. What is the amount of loss? What is the amount of loss? Yes, can you tell me what is the amount of loss? 50. Correct. So step 1. Step 1. Example 3. Example 3. Step 1. Calculation of percentage completion. Okay. Percentage completion is equal to cost till date divided by total estimated cost into 100. Correct? So it is 390. No, cost till date how much more? Cost till date 390. 390 divided by 390 plus 260 into 100. Can you tell me what is the percentage? 60%. Okay, so 60% completed. 60% completed. So step 2. amount of revenue that can be recognized for the current year. Can I say total contract price into above percentage completion? That is equal to total contract price 600 into 60%. Guys, can you tell me what is your revenue? 600 into 60% is 360. Yeah? 360. Current year revenue 360. Current year cost is 390. So will it result in any loss? Current year cost 390. Current year revenue 360. Is there any loss? Yes. How much? 30. Correct. But what is total loss of contract? 50. So total loss 50, current year loss 30. So remaining 20, provision for loss is to be created. You understand? That's good. Step 3. Calculation of total loss. So, sir, normally from this standard, will there be any theory questions? Sandeep, there can be a theory question, but normally all the accounting standards will be asked only practically, except it is something like, you know, that discontinuing operations yesterday we have seen no in the previous session. So those kind of areas normally theory they'll ask, but if you look at all previous year question papers, only practical problems for 4 marks, 5 marks they're asking. Theory questions rarely you'll see. Okay, so total contract price, how much? 600. $650. Total loss 50. Current year loss 30. How this 30 came? 360 minus 390. Therefore, further loss to be. Tell me how much I should write here, ma? Guys, you tell me how much should I write here? 20. Katam. Correct.
20.
That's all. Okay, now if I prepare my P&L, my P&L looks like this. Tan, 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 tan. Construction A account. I don't know if in real life construction XYZ, construction 234, or if you are constructing in you know, say for example Hyderabad Amirpet, you will write Amirpet construction account in real life. So here we write construction account. Construction account is nothing but a P&L. Okay, particulars rupees, particulars rupees. Okay, here I write by contract revenue. How much? 360. Cost incurred 390. To provision for loss 20. Total 410, 410. So this is by net loss to P&L 50. That's all. Like a P&L, take revenue on the right hand side, cost on the left hand side, calculate P&L. If there will be a total loss like this given in step 3, 20 rupees, provision for loss. So do you understand this contract, construction contract account? Hello. So can we go to next question? So is this the calculation and P&L we got? You can write contract account, you can write P&L account, no problem. Contract account is more appropriate because if you have 4 construction contracts, no, you will not have 4 P&Ls. All 4 construction contracts will go to 1 P&L. Okay. This is a theory question. You read it. Construction cost. All these are theory questions. This put a star mark. This is important. In your notes, write down gross amount due to or gross amount due from customer. Put the heading gross amount due to or gross amount due from customer. Okay, so write this pro forma. I'll explain what this pro forma is. Just copy this pro forma in your notes. Particulars rupees, cost incurred, add profit, less loss, less progressive billing. Cost incurred plus recognized profits minus recognized losses minus progressive billings. Progressive billings. So the amount will be either amount due to customer or amount due from customer. Are you done? Are you done copying this pro forma?
Yes, sir.
Okay. Now look here. You have incurred a cost of, say, for example, 100 rupees plus your profit element is 10. What is selling price? Guys, you have incurred cost 100. 110. So you added profit 10. So total selling price 110. Correct. In this, customer paid 40. What is due?
70.
That's all. That is the pro forma you have written just now. Whatever your cost incurred, sometimes it is a loss-making contract. Then instead of plus profit here, minus loss will be there. Because what is selling price? Cost plus profit. Or in case of loss, cost minus loss is selling price, right? So this is my selling price, and this is the progressive billing. Already he paid, already he agreed to pay or paid. So this is the amount due. Now imagine in this situation, one customer paid 125 already. So I have booked a revenue of 110 only, but customer already paid 125. So can I say advance extra amount 15 I received, which I need to give back to him? It is a liability. It is a liability. So 15 you need to show amount due to customer. In the previous example, when I said 70 customer paid, 40 is due from customer. This is due to customer. That's all. So this pro forma is very simple. But trust me, 99.9% students do not understand what the hell this is. They will write everything and finally they'll ask, sir, amount due to customer, I don't know, sir. Simple, ma. Take cost, add profit, that is selling price, subtract whatever the amounts customer has already paid or agreed to pay, that is called progressive billings. Till now, whatever the bills you raised, subtract it. So shall we go to question number 1? Okay, read question number 1, ma.
A firm of contractors obtained a contract for construction of bridges across River Revati. The following details are available in the records kept for the year ended 31st March 2001. Total contract price 1,000. Work certified for the cost incurred 500. Work yet not certified for the cost incurred 105. Estimated further cost to completion 495. Progress payment received 400. To be received 140. The firm seeks your advice and assistance in the presentation of accounts, keeping in view the requirements of AS7 issued by your institute.
Issued by your institute. Whose institute?
Our institute.
Our
ICA.
Yeah. Okay. So, guys, tell me what is contract price?
1,000.
What is total cost? Total estimated cost. Total estimated cost is 800.
1,100.
1,000 plus 495.
1,100.
What variety answers people are giving? 1,100, is it right? This 500, add this 105, add this 495. This is cost incurred, this is cost incurred, this is cost to be incurred. If you add this 3, you will get a total cost. How much is the total cost? Tell me. 1,100. Correct. So is it a profit making contract or loss making contract? Loss. How much? 100. Very good. 100 loss. Can you tell me what is the percentage completion in this question? Percentage completion. $45.45. How you got it?
55.
500 plus 105. 500 plus 105 divided by 1,100 into 100. This calculation also students are doing wrong. What should I do? Andavane. Is it 605 by 1,100 into 100? Yeah, right. Step one. Calculation of percentage completion of contract. I have given you a formula also. Cost incurred till date divided by total cost. So cost incurred till date is 605. 500 plus 605 divided by 500 plus 105 divided by 500 plus 105 plus 495. Tell me this percentage, please. Is it 55%? Okay, step 2. Total contract price 1,000. Total cost 1,100. Total loss. Step 3. Revenue to be recognized. Current year. Can I say total contract price into percentage completion? That is equal to 1,000 into 55%. Is that 550? Is that 550?
Yes, sir.
Very good. Now current year loss. Current year loss. 550 is the selling price revenue. minus what is the cost? 500 plus 105, 605 cost. So already how much you lost? Hello, answer please.
55.
55 is the loss. Current year loss 55. What is provision for loss to be created? Total 100 minus current year 55. So remaining 45 provision to be created. Now same ledger account will come. Okay. Now tell me, how much should I write here, ma? Hello. Revenue 550. Cost incurred 605. Provision for loss 45. So total here 650. Total here 650. Provision for loss. That's all. So how many of you understand this answer? If you understand, type yes. If you understand, type yes. Probably they might have asked you to calculate gross amount due to or due from customer also. They asked that also. Presentation of accounts, underline. So you need to show that gross amount also. So check the calculations. So we got this 100 loss, we got this 605 current year, we got this 55% completion, then we got current year revenue 550. This is important. This is important right now. Calculation of amount due to customers or amount due from customers. Calculation of amount due to or particular rupees. Cost will get 605 less loss 100. Correct? Less progressive billing. This is important. Go back to the question. What is progressive billing? Now, look here in the question. Payments received 400 to be received 140 means you tell me how many bills you raised on your customer. Already payment received 400 to be received 140. That means how much of invoice you have generated, how many bills you have given to him. You have given total 540 bills to him, out of which he paid 400, due 140. So can I take 540? Sandeep, correct. Correct answer. 540. So it is this minus this minus this. 35. So if it is negative, that means already he paid more. So this is amount due from or to. Hello, 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 hello. Amount due to customer or amount due from customer? Already he paid more. So we have to give it back. Liability. This they have written like this. They have written like this, but you prepare like a table, okay? This is to be shown as a liability. Obviously, you need to pay, means it is a liability. Are we done with this question? Can we go to next question? Guys, all of you tell me, can we go to next question? Okay, read question number 2, ma.
On 1st December 2001, Vishwakarma Construction Company Limited undertook a contract to construct a building for 85 lakh. On 31st March 2002, the company found that it had already spent 64 lakh 99,000 on the construction. Prudent estimate of additional cost for completion was 32 lakh 1,000. What amount should be recognized in the statement of profit and loss for the year ended 31st March 2002 as per provision of Accounting Standard 7?
Super. Isn't it same question? Isn't it same copy paste, numbers different? Guys, can you do this question yourself? Can you do this question yourself? LKG question, just 4 lines answer. That's all. So are we done? So now we will move to AS9. Put the heading AS9, revenue recognition. Dharani, can you turn on the mic and say hi?
Hi, sir.
Hi, what is AS9 heading?
Revenue recognition.
Revenue recognition. So from how many sources revenue comes to the entity as per AS9? How many flows of revenue, how many types of revenue is discussed in AS9? 3 types. One is when you sell goods. Second one is when you render service. Third one is when your resources are used by a third party, they will pay you either interest or dividend or royalty. So AS9 discusses about recognition of revenue from 3 flows, 3 different types of revenues they speak about. They are A, sale of goods, okay. B, rendering services, okay. C, the use of enterprise resources by others. That eats interest, royalty, and dividend. Okay, so write down in your notes. AS9. Three different types of revenue. A, sale of goods. B, rendering services. C, that yields 1, interest, 2, dividend, 3, royalty. Okay, now you tell me how interest is to be recognized. Dharani, I'll give you one example.
Yes, sir.
In ICICI Bank, for example, in ICICI Bank, there is one Kalpataru deposit scheme. In ICICI Bank, there is no deposit scheme by name Kalpataru. It is only example, wherein you pay 1 lakh rupees. That will be doubled in say 100 months. Yeah, makes sense. Correct. So you deposit 1 lakh rupees. You did not pay, you deposit 1 lakh rupees. That will be doubled in 100 months. Today I deposited say 1 lakh. After 100 months, I will take 2 lakhs. 100 months means 8 accounting years now, or 9 accounting years. So should I recognize any interest every year? or when I receive interest, 1 lakh rupees, 2 lakh rupees I'll receive. No, in that 2 lakhs, one is my principal, one is interest. So on 100th month, if I recognize 1 lakh revenue, is that okay?
Every year we should record.
What is that?
Every year we should record a revenue.
Every year you need to recognize. Okay. How you will recognize?
Proportionally.
Excellent. Based on time proportions. If it is simple interest, PNR by 100. If it is compound interest, then you will take 1 lakh is equal to 1 lakh rupees is the principal amount, 2 lakhs is the final amount. So 2 lakhs is equal to 1 lakh into 1 plus r whole power n. You remember in FM you will do no future value, present value.
Yes, sir.
So 2 lakhs is equal to 1 lakh into 2 lakhs is the future value. 1 lakh present value into 1 plus r whole power 100 months, means say for example 8 years, for the sake of is 8 years, 1 plus r whole power 8. So you solve what is r, based on that rate every year you recognize in books. That's all. This is nothing but IRR concept, ma. This is nothing but IRR concept. So here write down, interest should be recognized on time proportion basis. On time proportion basis. Always interest should be recognized on time proportion basis. Okay. Dividend. When dividend can be recognized, tell me. Hello. When
it is received.
No. That becomes cash accounting, no? When you receive, it becomes cash accounting.
Yes, sir.
It should be recognized when the investor gets a legal right to receive dividend. When the investor gets a legal right to receive dividend. So today Infosys convened AGM, and in AGM they announced 10 rupee dividend per share. I have 1,000 shares in Infosys. 1,000 into 10,000 rupees. I will recognize today, but they might pay me after a few days. They will pay me, but today I can recognize. Why? Because I have the legal right to receive. Once announced, they cannot take step back. Once a dividend is announced, they cannot take step back. So it is practically date of AGM, but technically, it is not relevant for CA intermediate level students, but technically for academic interest, I'm telling you. Do you know shares are quoted in the stock market based on ex dividend and cum dividend? Have you heard these words, ex dividend, cum dividend? Hello. Guys, have you heard this word, ex dividend, cum dividend?
Yes, sir.
Very good. So ex dividend means excluding dividend. Cum dividend means including dividend. So when this share, Infosys share, is quoted in the stock market on ex dividend basis, that day I can recognize dividend technically. But for academic purpose, AGM is enough. What about royalty? How royalty will be recognized?
Agreement.
Based on agreement. Follow accrual. Based on agreement, follow accrual. Say for example, there is Maruti Suzuki. Suzuki has given technology to Maruti. For that, Maruti has to pay royalty. Say 10 lakh cars manufactured. Per car, you need to pay 30,000. Right. You manufacture 10 lakh cars. As per the agreement, per car, 30,000 rupees royalty you need to pay. Calculate 10 lakhs into 30,000, whatever the amount is, whether it is paid or no, not on cash basis, on accrual basis, recognize. So we are speaking from revenue recognition point of view. So this example is given from Suzuki point of view. Suzuki has to collect revenue from Maruti. So they will calculate Maruti has manufactured 10 lakh cars into 30,000 rupees royalty, total royalty receivable this much. So they'll recognize that. They'll pass the journal entry. Maruti account debit to debtor. He has to pay Maruti account debit to royalty income account. That's all. So guys, you understand all these three?
Yes, sir.
All of you, you understand this? Please let me know. Very good. What about rendering services? I'm feeling tired. I don't know. Hello, madam. What about rendering services, madam? When will you recognize revenue from rendering services? There are two methods given. What are the two methods?
Completion of service.
Completed contract method or completed service method or
Professional.
excellent. Very good. So is it an option given to me that either I can use option 1 or I can use option 2? Is it so?
According to the service.
Very good. Excellent. I appreciate. Correct answer. Correct answer. So rendering services. Two options are given. Rendering services, two options are given. Here. Proportionate completion. Proportionate completion. This is not option. Company cannot choose, I will do that, I will do this. No, it is based on facts of the case. If it involves a single, performance obligation. If it involves a single performance obligation, for example, price get sold like ticket. So 6,000 rupees collected on March 24th. Travel date is April 12th. So Dharani, normally will we book tickets well in advance or will book on the day of travel?
Advance.
Obviously. So if you buy earlier, you will get it a cheaper rate, isn't it?
Yes, sir.
Now you tell me, on 31st March, SpiceJet, can they recognize revenue out of the 6,000?
No, sir. No.
Right? Performance obligation is a single performance obligation which is pending. So after completion of obligation only, you can recognize 6,000. They cannot say, Pavan sir, can we follow accounting policy? Date March 24 till April 12th. So total 19 days, 6,000 into 7 days divided by 19 this period. No. If it is single performance obligation, perform the obligation and then recognize revenue. You understand? A.R. Rahman received or agreed to receive rupees 20 crores. Rupees 20 crores for a concert. Okay, date of agreement 20th March. Date of receipt of amount 25th March. Concert date 30th September. Like A.R. Rahman, you have to book them well in advance now. So 6 months before you paid money to him. Can he recognize this 20 crores as revenue for 31st March? No, it is contingent, it is current liability. You have received in advance. You have received in advance. Isn't it? So this is completion method, proportionate completion method. Multiple performance obligations. If it involves multiple performance obligations, for example, lift AMC contract. So X Limited is an engineering company. Entered into AMC contract to maintain lifts for 1 year at a fee of 1 lakh rupees. Pavan sir, total 10 maintenance activities are to be done, out of which 4 are performed during the year. Can I proportionately 40% of revenue can I take to P&L? The answer is yes. The answer is yes. Or Pavan sir, there are no 10-4 kind of things, but out of 12 months, 5 months period is over. Can I take proportionately into 5 by 12? Yes. You can. You understand? So when multiple performance obligations are there, you follow proportionate completion. So guys, you understand these services? Part 3, use of enterprise resources by others, done. Part 2, rendering services is done. Now we'll go to part 1. What is part 1? Sale of goods. Very important. When do you recognize revenue from sale of goods? Tell me. Simple. When the risks and the rewards associated with the ownership of goods are transferred by the seller. When the risks and rewards associated with the ownership of the goods are transferred by the seller to the buyer. See, for example, I went to a supermarket. Reliance Fresh. So I bought this perfume, deodorant, body deo. Okay, so I took this from store. In the rack, it is there. I have taken it. I know that it is 250 rupees, 360 rupees. The cashier or the accountant, they saw Pavan taking this from the rack. Can he pass the journal entry of revenue? No. I'm standing in the queue. Can he pass the journal entry? No. The moment this is billed, I paid and I took this, I put in my pocket, then revenue can be recognized. Okay. Now you tell me, billing is one event, handing over the physical good to customer is one event. Billing is one event, handing over the physical good to customer is one event. Okay. So in this two, which one do you think is giving risks and returns to customer? Is it billing or is it handing over physical good? So someone is saying billing. Okay. Let me put it this way. In many shops, billing is one counter, delivery of good is another counter. Correct or no? In many stores, billing is one counter, delivery of good another counter. Imagine this is a Giordano, a glass, a perfume from Paris in a glass bottle. Imagine. I paid 10,000. I paid 10,000. That guy is taking this bottle from billing department to the delivery and it is broken. It has fallen on the floor. It is broken. Who will bear the loss? Company will bear the loss or Pavan will bear the loss? Company will bear the loss. That means risks and rewards are not handed over to customer. So my dear friends, this, when it is given to me, I am going out of the store from my hand. If it is fallen and broken, then it is on me. So understand the rule. Normally, physical delivery of the goods is the event that transfers risks and rewards. Physical delivery of the good is the event that transfers risks and rewards. However, there are three exceptions. Hey, even if goods are sold on credit also, the moment physical delivery is done, pass the journal entry. Whether it is cash or credit will not make any difference. The whole accounting standard never discusses, this accounting standard has not discussed anything about cash or credit. You transferred risks and rewards, pass the journal entry, that's all. Even if it is credit, what difference it makes? Cash credit will never affect your accounting. There are three exceptions. One, consignment. Sent on consignment. Physical delivery is given to agent, but not risks and rewards. Do you agree with me? In consignment, I'll give physical delivery to agent, but risks and rewards are still mine. Two, sale on approval basis. Physical delivery is given to customer, but customer has not yet accepted sale. When he accepts, then only sale will happen. So simply physical delivery given, you cannot record revenue. Three, very important. Put a star mark. Very important. In first two cases, physical delivery is there, sale is not there. In third case, physical delivery is not there, still it is sale. In case 1 and 2, physical delivery is there, sale is not there. In case 3, physical delivery is not there, sale is there. You understand? So it is like, it happens very frequently. It happens frequently. How it happens, you know? You'll go to a supermarket or a provisional store or a medical shop. You'll go to some shop. You'll buy something. They will pack. Billing is done. You'll pay money also. You'll pay money also. And then he has given that cover to you. You will tell, Anna, please wait for 5 minutes. Keep the cover here. I'll go there. Small work, ATM. I'll withdraw money. I come and then I'll take the bag. Okay. So all the items you bought are put in a cover. All the items you bought. Seller is ready to give delivery. Sir, take this. Buyer is saying, Anna, I'll take after some time. Now you tell me, sale is over or no? From seller point of view, sale is over or no? Over. This is the favorite of ICA. Is the favorite of ICA. That's all. Then the last point of the standard is, if there is a significant uncertainty in collection of the sale consideration or in collection of the revenue. You sold goods, but will I be able to receive the revenue? I doubt it. What to do? What to do? Very interesting. Very interesting. It can happen in two situations. At the time of recognizing revenue, recognizing revenue. This is subsidy. Okay, just give me 1 second, please. So tell me, at the time of recognizing revenue, if you know that you will not receive this money, what will you do? Guys, tell me, at the time of passing journal entry itself, you know that this money might not come. One, you try not selling to him, not recognizing the revenue. Okay, but what if it is a bank or any finance company, leasing company? Today, this month EMI, I know that it will not come. At the time of passing journal entry, you know that this revenue will not come. Then what to do? Standard said, do not recognize revenue. Revenue recognition is to be postponed. Revenue recognition is to be postponed. So that significant uncertainty is there, no? When that uncertainty is removed, you got the certainty, then recognize. But Pavan sir, already I passed the journal entry, I recognized the revenue. Very important. Do not reverse revenue. You cannot reverse. Create a provision. Uncollectible amounts. So when debtor is not giving money, what is the journal entry you created on sale? Debtor account debit, sales account, being goods sold on credit. This is revenue recognition. You recognize revenue, 2 sales, this is revenue. After 10 days, you realized he'll not give money. Then you cannot write. Once revenue recognized, you cannot reverse it. You cannot. So what to do? Create a provision. Provision for bad debts. Bad and doubtful debts accountable. That's all. This is to be done. Many questions are asked on this. Many questions are asked on this. Questions are asked on this. Questions are asked on this. Physical delivery. Okay, so shall we see some problems now, guys? Shall we see some problems? Manoj, are you there? Manoj, if you have mic, say hi in mic.
Hi, sir.
Before the class, I thought I will not discuss anything in theory. Straight, I'll go to problems. That is my mindset. And I have bloody explained every inch of standard. Is this a disease? Manoj, do I need to consult a doctor? All these things we have discussed. Question number 1. Read, ma.
The board of directors decided on 31st March 2002 to increase the sale of price of certain items retrospectively from 1st January 2002. In view of this price revision, with effect from 1st January 2002, the company has to receive 15 lakh from its customer in respect of sale made from 1st January 2002 to 31st March 2002. Accountant cannot make up his mind whether to include 15 lakh in his sales for 2001 to 2002 advice.
All of you read this question, please. All of you read this question again. You tell me whether this revenue can be recognized or no.
So yes, sir.
Yes or no? See, the question is actually stupidity, okay? The question is stupidity. Imagine you bought goods, I sold goods to you. Imagine I sold goods to you at an agreed consideration of 1 lakh. After 10 days, I said the rate is not 1 lakh. It is 1,10,000. Will you pay 1,10,000 to me? Will you pay extra 10,000? Unless there is a legal contract. Normally, this 10,000 is stupidity. No one will pay. No one will pay. They'll dispute. Why will I pay? Here, seller company board of directors passed a board resolution. They decided to increase prices retrospectively. Are you kidding me? Are you kidding me? Prospectively. From tomorrow, it is 1,10,000. You can. Last 3 months, you sold goods. On that, you are increasing price, and that is 15 lakhs. Can you recognize this 15 lakhs? The answer is no. So, how you need to write this 15 lakhs is price revision. Price revision by seller company. 15 lakhs is price revision by seller company. There are two situations. A, if there is a certainty that the amount will be accepted by customers, it will be received by the seller entity, and revenue can be recognized. Answer, is this possible? In extreme rare cases, it is possible. Extreme rare cases. For example, imagine IOC selling petrol to another public sector entity. One government entity selling goods to another government entity, wherein the rate will be decided by government. So today I said 100 rupees, tomorrow I said 105. Maybe possible, government both sides. In case of a private entity, normally not possible. Customer will not pay. So what is part B of the answer? if there is no certainty that the additional revenue will be received, and if there is any certainty attached to collection of revenue, it is better to postpone. It is advised postpone revenue recognition. That's all. This rule 100% as it is applicable to NPS in banking sector. Banking sector. 3 EMIs customer has not paid. 4th EMI will he pay or no? I don't know. So if I keep on recognizing revenue, I will not receive it. There is no certainty that the borrower will repay. So I will not recognize revenue. I will wait. Then it will be recorded on cash basis. Same answer here for question number 1. All of you read question number 1 yourself. Answer to question number 1. All of you read it yourself. If the company is able to assess the ultimate collection with reasonable certainty, once there is reasonable certainty, customers will repay. Okay, then recognize. That's all. So Manoj, read question number 2. Hello. Sandeep, read question number 2, ma.
Sorry, sir.
Yeah, read.
I hear Sandeep, sir.
Yeah. Read. Anyone is fine. Anyone is fine.
Y limited usually certain resources of X limited. In return, X limited received 10 lakhs and 15 lakhs as interest and royalties respective from Y limited during the year 2001 to 2002. You are required to state whether and on what basis these revenues can be recognized by X limited.
LKG question. This 10 lakhs and 15 lakhs received as interest and royalty. This 10 lakhs is royalty. 15 lakhs, sorry, 10 lakhs is interest. 15 lakhs is royalty. How will you recognize 10 lakhs? Time proportion basis. How will you recognize 15 lakhs? Based on the agreement. Katam. That's all. There is no stuff in this question. Basic question. Once you are done reading, type done in the chat box. When you write done, then we'll continue further. Very good. Can we go to next question? Read question number 3, ma.
A claim lodged with the railways in March 2001 for loss of goods of 2 lakh had been passed for payment in March 2003 for 1,50,000. No entry was passed in the books of the company when the claim was lodged. Advise P Company Limited about the treatment of the following financial statement of accounts for the year ended 31st March 2003.
Very important. Put a star mark. Very important question. So, in March 2001, X Limited gave a parcel to railways. to deliver to some address. In March 2001, X Limited gave a parcel to Railways to deliver to some address. Goods are not delivered. Goods are lost. How, where, why, no one knows. X Limited went to railway station and asked, "Hey, where are my goods?" Then X Limited lodged a claim for insurance or for compensation. My goods are stolen. 2 lakhs worth of goods. Give me my 2 lakhs. No one gave. Finally, in March 2003, so here, goods worth 2 lakhs. In March 2003, you received a call from Railways. Hello, X Limited. Yes. Can I speak with Ashwant? Yes, please tell me. You have sent goods by parcel in railway station 2 years back. Yes. Last goods, 2 lakh rupees. You have lodged a complaint. Come, take a compensation. We'll pay you rupees 1,50,000. So you're happy or no? Will you take that 1,50,000 or no? Happily, you will go take that 1,50,000 income. Now tell me, do we recognize rupees 1,50,000 in our books now? The answer is yes. Is it a prior period item? Super question. Is it a prior period item? It was not accounted for. It was not accounted for in 2001 because there is no certainty of receipt of 2 lakhs. By mistake, you did not omit it. It is not omission. You know that there is 2 lakhs, but it is in the nature of contingent asset. Oh my God. Will I receive? Maybe yes. It is in the nature of contingent asset. So you did not recognize. Why? Because there is no certainty of receipt. Now that there is certainty and I received 1,50,000, I will record it. That's all, simple. Read answer, ma. Manoj, read answer.
Yes, on the revenue recognition states that where the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim. Revenue recognition is postmarked to the extent of uncertainty involved. When recognition of revenue is postmarked due to the effect of uncertainty, it is considered as the revenue of the period in which it is properly recognized. In this case, it may be assumed that collectability of a claim will not certain in the earlier periods.
Was not.
This is supposed from the fact that only rupees 1,50,000 were collected against a claim of 2 lakh. So this transaction cannot be taken as prior period item. In the light of ASY, it will not be treated as extraordinary item. However,
it is not extraordinary item also. But if you feel 1,50,000 is big amount for this entity, then disclose it separately. You will disclose it separately. But 1,50,000 is not a big item. Okay. Continue.
Our ASY states that when items of income and expense within profit or loss from ordinary activities are of such size, nature, or incidents that their disclosure is relevant to explain the performance of the enterprise for the period The nature and the amount of such items should be disclosed separately. Accordingly, the nature and amount of this item should be disclosed separately.
From here to here, it is important because question is asked from AS9, but you are writing AS5. Important. If you do not include this point, you will not get full marks. Maybe for 5 marks, if you write first para, you will get 2 marks. For this highlighted point is there, no, for that you will get 3 marks. Cheating, no? You are thinking of this. In final, in one question, 5-6 accounting standards will come. Okay, read question number 4 now.
In the year 2001 to 2002, XYZ supplied goods on consignment basis to ABC, a retail outlet worth 10 lakh. As per the terms, ABC will only pay XYZ for the goods which are sold by them to third party. Rest of the goods can be returned back to XYZ, and ABC will not have any further liability for this.
So reading this para, what you understand? Can I say XYZ is the principal and ABC is the consignment agent? Yes or no? That's all. Read next part.
During the year 2001 to 2002, ABC has sold goods worth 5,50,000 only, and rest of the goods are still lying in its store, which may get sold by next year. Advise XYZ how much revenue it can recognize in its books for period 2001 to 2002.
So you tell me, XYZ, how much of revenue XYZ can recognize? Goods sold by the agent to third party. How much? 5,50,000. So that 5,50,000 you can recognize sale. Balance you have to show in your closing stock. Correct? 5,50,000 is sale. Balance is closing stock. That's all. Okay. So with this AS9 is also over. But since we have a few more minutes, I'll give you one more example. Repeatedly asked in the exam. AS9 repeatedly asked in the exam. Right now. A Limited entered into a sale agreement with B Limited on 1st Jan 2022. Supply goods worth rupees 1 lakh. Deliveries are to be made every month. Deliveries are to be made every month for the next 4 months. Each delivery is for goods worth 25,000. A Limited received rupees 1 lakh on the date of sale on signing the agreement. Sent goods on February. 15th March. B Limited informed A Limited that there is a leakage in the godown due to which goods can't be stored, and requested A Limited to postpone deliveries till further notice. Subsequently, the accountant of A Limited recognized ₹50,000 supplied on Jan and February as revenue and recorded the balance 50,000 as liability. Advance received from supplier. Is the accounting correct? This is the question. So guys, have you seen this question before? If you have earlier written the exam, or if you read RTPs or suggested answers of previous attempts, you'll see this question. 2-3 times this question came. 2-3 times. So Priya is saying no. What about others? Whether the accounting treatment is correct or wrong. So tell me, what is the correct accounting? What is the correct accounting? Ray. Why provision, Ray? You already collected 1 lakh rupees. What provision you will create? You collected 1 lakh and you have not supplied goods. What provision you will create, ma? It is not you supplied and money did not come. You received money. Delivery is not happening. Do you remember? It is third case. Sale happened, but physical delivery of good is delayed. Correct. Excellent. Right answer. So recognize full revenue. Recognize full revenue on 1st Jan 2022 itself. But there is a twist in this answer, okay? If the goods are ready, identified, packed, and in deliverable condition. Goods are ready, goods are identified, goods are packed, goods are in deliverable condition. So if you say yes, goods can be sent back. But Pavan sir, what if goods are not ready? Then you cannot recognize revenue. For example, this is a contract for sale of, say for example, I need to supply laddu. I need to supply some commodity, some laddu. So every month I need to supply these many kgs of sweets. When you called me and said, Pavan, don't send this month sweets, I have not made them. Then if goods are not ready, then you cannot recognize revenue. If goods are ready, goods are identified, goods are appropriated, goods are packed, goods are in deliverable condition, then you can recognize full revenue. So are we done with this standard? Hello. Any doubts, ma'am? So this is done now. So 14 is a separate chapter. Accounting for amalgamations we'll see separately.